let's straight away get to the first corporate on our show now. We've got the management of Tega Industries joining in, and I think the stock is down close to about 1.5%. Mehul Mohanka, Managing Director and Group CEO of Tega Industries, is now with us on the show. Mr. Mohanka, thank you very much for joining in. So the first question is, for the first 9 months of the year, you've clocked in a revenue growth of about 12%. You have guided for a 15% revenue growth for FY25. Are you on track? Does the 15% top-line growth stand? And how is Q4 shaping up?
Good morning. Thank you for having me on the show. So yes, we've had a good quarter three results. We had actually guided the market at the end of quarter two itself that we would be retaining guidance and we would be back at 15% levels, at which we delivered it in Q3 earnings. And we're retaining our guidance as well going into the end of the year.
Okay, and give us some color about Q4 and what about FY26? How is FY26 to your mind going to shape up? Better than FY25? Similar? What are the headwinds, tailwinds as you see it?
So we anticipate FY26 to be better than FY25. Of course, we're in the middle of budget season for ourselves, so I would know that by the end of our Q4 results. But we're seeing significant tailwinds, mainly in copper and gold. That are the two primary metals that we work with, and we've seen considerable demand in both these metals in the global mining and consumable market. So we're quite bullish about our growth trajectory remaining strong going into FY26 as well.
Mr. Mehul, thank you so much for joining us. The first question is, where does the order book stand at currently? What was the order info as far as Q3 was concerned? Q4, what is it that you're expecting to add as far as the order book is concerned? FY26, what is the order prospect pipeline and what is your typical win ratio?
So as of Q3, our order book stands at 1,258 crores, out of which 758 crores is executable over the next 4 quarters. As of, I think, December 23, we were at 593 crores. So that's a significant improvement on the order book for us. Our normal order book to win, pipeline to win ratio is roughly around 70-odd%. And we're seeing FY26 to continue to be as robust as current trends in terms of order book as well.
So at the end of FY26, where can we expect your order book to stand at after the execution?
So we would typically should end the year with an open order book as of 1st April of close to about 700 to 800 crores.
Okay. Margins for you have bounced back, and you had indicated that in the prior quarter there were certain one-offs which hurt the margins, and now they've bounced back to levels of about 22.3%. How are Q4 margins likely to pan out? Because typically H2 for you is much stronger.
Yes, of course. So we will end Q4 as well, holding our margins at current levels. So we don't see any major stress on our margins in the last remaining quarter for the financial year.
And there were some delays in shipments, deferments of orders by certain customers that you had flagged off in the prior quarter. There were some delays in receipts of payments also. Has the situation ironed out? Are there any issues that you're facing in the current quarter or likely to face in Q4?
Also, the team has been able to manage the situation quite well, even though we continue to face challenges in terms of shipping globally. But we don't see any major stress going forward because we've been able to manage that and de-risk our supply chain to that extent.
Okay. One thing that the street was waiting for eagerly was commencement of operations as far as the Chile facility was concerned. We understand that all of the approvals were in place and the opening was expected to be in the first quarter of FY26. Is that on track? We understand there could be some delays there. What is causing the delay? What is the expected loss of revenue due to these delays? And what are the alternatives that you have for that particular facility?
Yeah, so the commercial production of that plant is delayed by 2 quarters, as we had mentioned in our earnings calls. We don't see any significant impact of that on our revenues because we'd already taken preemptive steps by adding incremental capacity in our existing facility. So we would not see any margin or revenue contraction in FY26 or 27 owing to this 2-quarter delay.
Sorry, you had guided for, I think, the commercial sales to begin in June or July of this year. Is that correct?
That's
so
correct.
That holds. That holds.
That holds. Yes. So we would see the continuous uptake on the revenue from the capacity that was supposed to come in because we've added incremental capacity in our existing facility.
A quick word, since we're out of time, on exports. How have exports fared for you?
So exports have been strong. So out of India, our revenue mix is 86% in favor of exports, and that continues to remain robust.
And any issue because of the tariffs?
Not at all. We are not impacted by tariffs at all.
Thank you so much, Mehul, for joining us and giving us a sense of how Q3 panned and what's the outlook as far as FY26 is concerned.